Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the best dividend stocks going ex-dividend next week, December 10th through the 14th, 2018. So we're going to be going over 5 of our winners, which are ticker symbol ADP. This is the automatic data processing. Ticker symbol TROW. This is TROW. We have ticker symbol WSBC. This is Westbanco. We have ticker symbol SFNC. This is Simon's First National Corp. And we have ticker symbol NTRS. This is the Northern Trust Corp. Now, those are the 5 stocks we're going to be covering in today's article. We did have a few runner-ups, which are posted over on my Facebook page, as well as how many years they've grown and paid out a dividend. Now, the winners, I always sort by how long they've grown and paid out a dividend. So these were the winners based on the time. So initially, when I screen all my stocks, I always screen all my stocks for having starting yields over 1.5%, rising revenue, net income, free cash flow positive over the last 5 and 10 years. Forward price to earnings are expected to grow, meaning that their earnings per share going into the future is expected to decrease, and that they've grown their dividend for the past 5+ years. So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week, so consider subscribing. And of course, drop a like, leave a comment below if you have any sort of suggestions. And if you are brand new to the channel and enjoyed the content, hit that subscribe button below. Now, we cover in these articles and videos here the dividend dates, the dividend that you'd receive, your payout, the price comparison to the yield, PE comparison to the industry and the S&P 500, the payout ratio, dividend history, and a few other items. Now, I do have a couple recommended books. One of my favorite books as far as dividend rating goes is called The Snowball Effect. This is just, you take a snowball, just the way it sounds. You take a snowball, you roll it down a hill, and as it rolls down the hill and rolls over more snow, it gets larger and larger until, eventually it stops. But in this case, your dividends, while they may start out small, you might get $40 a month. Those $40 buy you more money into the next month, and then it becomes $43, then it becomes $44, then it becomes $50, then it becomes $55, and then it just continues to snowball year after year. So if you watch my past videos where I go month to month, my dividends at the beginning of the year were estimated to hit $170. I'm going to be hitting $195 in paid out dividends by the end of 2018. My estimate for 2019 is $350 of paid out dividends by the time I reach the end of 2019. I may have hit 400 dividends or more. So check out the book. There's a bunch of other recommended books here as on my website. I have them sorted by general investing books here. I have stock market dividend investing books here, and I have real estate investment books because I do a number of stock market investing, real estate investing, and a few other investments out there. Now, if you haven't got started in your investment journey, my #1 recommended broker is M1 Finance. They offer free trades, partial shares, Roth IRA, self-directed Roth IRA, meaning that you're investing for yourself. There's no fees associated with the account. If you invest in the S&P 500, you're not paying anybody just to invest your money in a fund. And if you sign up, you get a free $10 for investing your first $100. They also have a bunch of other little benefits. Top right corner, I will have a link to my video. And I also have Robinhood there to get a free random share, but Webull also offers this, and a few other brokers offer some benefits. I think Robinhood is one of the cleaner looking ones. It is a taxable account. They don't offer any Roth IRA, so one of the negatives there. I have 2 free available apps in the description below. First links, one's called the Simple Dividend Calculator. It calculates how many dividends you'd get paid out over a certain amount of time if you were to invest in a specific stock that pays out X amount of dividends per year, and you wanted to add into your portfolio over weeks, months, or years. That calculator is there for that. If you're trying to find out how much money you need to invest to hit your retirement goal, the Simple Retirement Calculator will do it. It'll baseline the 7% annual increase with 3% inflation, and how much you need to retire, or how much you want to retire with in your retirement years, and when you plan to retire, and it'll do the math for you there. Now, both of these are doing some updates as well, so if you do have other suggestions as far as you download it, you try it out, email me or leave a comment below. Now, all of these stocks we're going to be covering the ex-dividend. All these stocks are ordered by ex-dividend dates from December 10th through the 14th, 2018. So all of these actually fall on 13 December, Thursday, next week. So, and because they all fall on the same day, I order them by how long they've grown and paid out a dividend. So ADP here, it's grown and paid out a dividend as we saw. That's incorrect. Let me refresh it real quick. I just updated this. 43 years. Okay, so we're starting with our top pick here of 43 years of growing and paying out a dividend. So number one, we have ADP. This is the automatic data processing. It's an outsourcing company. ADP provides technology-based outsourcing solutions to employers, vehicle retailers, manufacturers. It operates in 3 segments: employer services, professional employer organization services, and dealer services. I used to work, I work at 2 companies now in the past since I got a W-2 job, and they both use ADP for their payroll systems. So payroll, if you're in a W-2 environment, I'm sure your payroll system may use ADP if you log on there. Their ex-dividend date is next Thursday, which is the 13th of December. You'd have to buy this one on Wednesday, hold it until the ex-dividend date, and then on the very 1st of January, Happy New Year's, you would receive your payment. That's a great way to start off the new year. Now here, this first graph here, I have this by 10 years. So here you can see their price, revenue, free cash flow, net income over the past 10 years. What I like to do here is divide it by 10, and that'll give you your average return per year. For example, their price here at 282.3% over the past 10 years. You divide that by 10, and your average return per year is roughly 28.2%. You can see between 2014 and 2016, it didn't have a whole lot of movement. It traded sideways. It was waiting to break out. It recently broke out as of starting of 2017, right around there, end of 2016, this company broke out and just began running for the hills here. So it's up, roughly within this time frame here, it went from maybe 120% up, maybe 140, to now 282%. So this one just flying right now. In the orange, revenue up 5% on average per year. In the green, net income 4% on average per year. And in the red, free cash flow up 2.3% on average per year. Moving down, we can take a look here at their 1-year graph. Now currently, they pay out 79 cents per share each quarter. They're currently priced at $147.40. Their 200-day moving average is $133.54. This shows their current dividend yield of 1.79%, but because they did just raise their dividend here, you can see a raise from 69 cents per share to now 79 cents per share. That's a 10 cents there. That bumps their new dividend yield to 2.14%. So very nice increase there. That puts them right up in here, right up in this level right here, putting them above their current price. So PE is still pretty high at a 37.7%. Forward PE is at a 27.97. Price to book, 13.79. Price to sales, sales, that's correct, 4.0. So when looking above here, when charted, it does show the current stock has a price underneath the yield because the yield is sitting up here at 2.14, which may indicate it could be undervalued at this time. The stock is trading above the industry average here. The industry average is 25 for the services specific group. It is also trading above the S&P 500 currently at 22.78. After today on Tuesday, as the markets fell 3%, this S&P percentage was probably down into the 21 now. So it is sitting above the 60% payout ratio. It does have a payout ratio of 61.1%. It's had dividend growth here. Whoops, didn't mean to do that. For the past 43 years, since 1975, it has grown and raised their dividend. It's grown their dividend on average over the last 10 years, 13.9%. That's a very nice increase there, nice and steady. Their price to book is 13.79, which is above 3.0, where asset-based companies would be considered a deal. But this is it's a price to sales value is a 4.8, which is above 3.0, where sales and services-based companies would be considered a deal. So this is a sales and service-based company, mostly service. So this is very close to being, it's slightly over that 3.0 value. So you wouldn't use price to book in this sort of a valuation, but their price to sales, you'd probably want to look at the history of it. How long have they been around this 4.8? Do they ever come below or near that 3.0 rating? That would be something to check out. Now their current PE, again 37.7. Their forward PE was at a 27, so about 10 points off. Their dividend yield, again 2.14% currently as of that dividend hike. That gives their new dividend payout per share at $3.16. Payout ratio 61.1%. Dividend growth for the past 43 years, and we've already sort of covered that information there. So that was ticker symbol ADP, Automatic Data Processing. Number 2, we have TROW. This is T. Rowe Price is a publicly owned holding investment manager. T. Rowe performs services to corporations, corporate, public, and Taft-Hartley retirement funds, foundations, and endowments. It also contains subsidiaries and that manages separate client-focused equity, fixed income, balanced portfolios, common trust, and institutional mutual funds. So this company here goes ex-dividend again next Thursday, the 13th of December. You would have to buy this one on Wednesday or prior, hold it until Thursday, then you would receive your payout at the very end of the month here on the 28th of December 2018 still. Here, if we're taking a look at their 10-year chart, we can see here in the green, their net income up 27.3% on average per year, or 273% over the past 10 years. Their price is up 21.9% on average per year. It has came off their highs in 2018, but it still gives you an average return over the past 10 years of 21.9%. Here during the financial crisis, you can see that they did take a hit, but they quickly recovered within about a year there, it looks like, and they just continue to be trending up. They did have about a bit of a spout here between 2015 and 2017 here towards the end. They did go sort of down here. Their net income dropped here. That could be something you take a look at their quarterly, their yearly reports, their 10K, and see what happened exactly here in 2016 going into the year that caused them to fall. Did they do some sort of acquisition? Did they have to sell off some sort of assets or something? So take a look at that. That would have been their free cash flow. So yeah, free cash flow going down like this. This could be some sort of acquisition. Maybe they bought something. They could have picked up something here. So that could be something interesting to check out. In the orange here, revenue up 15% on average per year, or 150% over the past 10 years. And in the red, free cash flow up 98%, or 9.8% on average per year. So quickly recovered during that little downturn as far as free cash flow goes, and they're just about coming back up to where they normally have their free cash flow at. Pretty solid looking company. This is a financial, and being that it is sort of in that financial sector, and they've grown and paid out a dividend for 31 years, very interesting company. So moving down here, let's cover the rest of your information here before I spat out more information. So 70 cents per share is how much they currently pay out per share. Their 200-day moving average is at $111.76. Financials recently have been going downhill, starting back in May. It looks like this company has fallen off their highs of around $120, now trading at $99.60. Their current dividend yield is 2.68, right there, right around there, 2.68, 2.7, just depends on the day and what the current price is at. Their current PE is at a 13.81, forward PE 13.42, price to sales is 4.65, and price to book is at a 3.7. When charted, let's go ahead and bump up a little bit. When charted, it does show the current stock here at $99. That price is under the current yield, which may indicate it could be undervalued at this time. The stock is trading below the industry average of 15.4 and below the industry, below the S&P 500 PE average of 22.78. So it's currently at a 13.81. Its price to book is at a 4.6, which is above 3.0, where asset-based companies would be considered a deal. And its price to sales is at a 3.71, which is above that sales and service-based companies would be considered a deal. Again, payout ratio, really nice at 2.81. Annualized payout $2.80 per share each year. Their payout ratio, very solid, 38.6, and dividend growth for the past 31 years, growing over the last 10 years at a rate of 19.1%. And they've grown and paid out a dividend since 1987. So they've paid out through multiple recessions. ADP and T. Rowe have paid out through that 2000 recession, the 2008 recession. I believe there was a pullback in 94 on some companies. And then whatever recession we may go through in the future, I'm pretty sure, not 100% sure, but 80% sure that these companies will probably continue to pay out and grow their dividend, being at these payout ratios are fairly low and they're strong financials and companies. Number 3, we have ticker symbol WSBC. This is the West Banco. It operates as a holding company. It provides retail and corporate banking services in the United States. It operates demand deposits, market money accounts, money market accounts, savings deposits, and certificates of deposits. This one is going ex-dividend next Thursday on the 13th of December. You'd have to buy this one on Wednesday or prior. And you then hold it until Thursday and receive a payout on the 2nd of January. So again, nice little bonus going into 2019. Here, 10-year graph in the green, net income up 20.1% on average per year, or 201% over the past 10 years. And the red, free cash flow up 19.2% on average per year, or 192% for the 10 years. In the orange here, they have their revenue up 9% on average per year, or 90.74% over the last 10 years. And in the blue, we have an increase there of 7.8% over the past 10 years, or 78% for the 10 years here. So their price is actually the least. Normally you see a lot of these companies where their price normally sits here towards the tops as far as their financials go. Here, this one, their price is actually at their lowest percentage as far as, where their revenue, free cash flow, and net income is at. And you can see here that they recently came off their highs of, let's see here, what was there? About $50 per share is where they were back in what's prior to this, August. They were right around $50 point. Now they're currently trading at $43.47. So they currently pay out 29 cents per share. Their 200-day moving average is at $45. They looks like they bottomed out here at $39 per share. They're now back up to 43.47, and their current dividend yield, let's see if that's correct, 2.67. Yeah, right in that range. So depending on the day, this can trade around 2.6, 2.6, and so it just depends on that price of the stock. PE ratio is at a 17.6, forward PE 13.71, price to sales 4.85, price to book here, this is a financial again, 1.23, so pretty good within that little price to book asset-based company here. So when charted, it does show the current stock does have a price under the yield here, which may indicate it could be undervalued at this time. The stock is trading above the industry average here. The industry average for these financials here is 13.6. It is also trading below the S&P 500 average of 22.78. It is sitting below 60% payout ratio. It's at a 37.5% payout ratio. It's grown their dividend for the past 7 years since 2011. So it did cut their dividend here by 50% in 2000 and what was it? I think it was 2007. They cut their dividend by 50%. They were paying around 24 cents per share. They dropped it down to 12 cents per share, and then they started raising it again in 2011, and they're actually at a 0.03% increase over the past 10 years. So they did cut it by so much that really, if you had bought them back for the dividend during prior to the downturn, your dividends would have pretty much remained flat there. They do have a below 60%. We already covered that. Price to book 1.23, which is below 3.0, where asset-based companies would be considered a deal. Price to sales 4.85, which is above 3.0, where sales and service-based companies would be considered a deal. The stock is trading around a 17.6 PE, industry 13.6, S&P 500 22.78. Dividend yield sits around that 2.67 range, depending on the price of the day. They pay out $1.16 per share each year. Payout ratio 37.5. They've grown their dividend for the past 7 years at an increase of 0.03% on average over the last 10 years. Because back when they cut their dividend in 2008, somewhere in that time frame, they cut it by 50%. So over the past 10 years, if we looked at this over 5 years, this would have been different. But because we included that 10-year difference of them cutting it during that downturn, that gives them an average increase over the last 10 years of 0.03%. Number 4, we have ticker symbol SFNC. This is the Simons First National Corporation. It's a multi-bank financial holding company. It provides banking services to individual and corporate customers in Arkansas. Their ex-dividend date here is on Thursday, the 13th of December. You'd have to buy this one on Wednesday, hold it until Thursday, receive your dividend payout on the 4th of January. Here, 10-year chart in the green. Net income up 565%, or 56.5% on average per year. In the red, free cash flow at 41.2% on average per year, or 412% over the last 10 years. In the orange, revenue up 39.3% on average per year, or roughly 39%, 393% over the past 10 years. And in the blue here, their price is up on average 10% per year, or 120% over the past 10 years. So you would have doubled your return here if you had invested in this one. 100% over the past 10 years would have doubled your return. Let's see here. There's really strong financials, and their price doesn't really show it. So kind of interesting. Again, one of those financials that just hasn't gone anywhere. You can see trading sideways here for quite a while, since back in 2016. Even before that, there really hasn't been a whole lot of movement going on for this company. Here, taking a look at their 1 year chart, they're currently pay out 15 cents per share. You can see they leaped it from right around 12 cents per share to now 15 cents per share. Their current price is $29.27. 200-day moving average is $29.81. So they are currently below their 200-day moving average. You can see they did bottom out here. They hit some sort of floor of $25 per share before bouncing back up. Their current dividend yield is 2.0, right around there. Yeah, 1.96 to 2.5 seems about their average PE ratio, their average yield right now. Price PE ratio 15.49, forward PE 12.31. Their price to sales is at a 3.89, and their price to book is at a 1.24. So pretty good there as far as asset-based companies. Again, another 1.2. So when charted, it does show the current stock does have a price under the yield, which may indicate it could be undervalued at this time. The stock is trading above the industry average here of 13.6. They're at a 15.49. And it is also trading below the S&P 500 PE average of 22.78. So their forward PE is at a 12.31, which will put them below the industry average and continue to stay below the S&P 500 average. Their payout ratio is at a 25.8%, very low. Dividend growth for the past 6 years. Their price to book is at a 1.24, which is below 3.0, where asset-based companies would be considered a deal. This is an asset-based company. It's a financial holding assets. Price of sales is at a 3.89, which is above 3.0, where sales and service-based companies would be considered a deal. Here, dividend yield around 2.4 to 2.8 annualized payout. They pay out 60 cents per share each year. Their payout ratio 25.8. They've grown their dividend for the past 6 years, since 2012. Now, they did freeze their dividend. They didn't cut their dividend. They froze it between 2008 and 2012. And their average increase in dividend over the past 10 years is at a 5.78. So this does put them a little bit better than this previous company up here, the WSBC, Westbanco. So that was our number 4th stock, ticker symbol SFNC. Number 5, and our final stock here, is ticker symbol NTRS. This is the Northern Trust Corporation. It's another financial holding company that offers investment services to individuals and corporations worldwide. Its offerings include asset servicing, fund administration, investment management, banking, and fiduciary solutions. Their ex-dividend date is, again, next Thursday, the 13th of December. You'd have to buy this one on Wednesday or prior. Hold it until Thursday, the ex-dividend date, and you would receive your payout on the very first of the year, 2019. Here, over the past 10 years, in the red, revenue up, free cash flow up 212%, or 21% on average per year. In the blue is their price up 117% over the past 10 years, or 11.7% on average per year. In the green, net income up 89.12% over the past 10 years, or 8.9% over the past 10 years. And in the orange, we have their revenue up 20.64%, or 2% on average per year over the last 10 years. So interesting there. Now moving down to their 1 year chart here, they currently pay out 55 cents per share each quarter. Their 200-day moving average is at $104.32. They're currently priced at $98.96. You can see here during October, they hit their bottoming out point right below $90. They broke 90, probably fell into that $89 point, and have now bounced back up to $98.96. Their current dividend yield because they just recently increased their dividend here, it looks like they increased it from 42 cents to now 55 cents. That's a very nice increase there, 13 cents. That puts them right around a 2.2% yield. This is actually off the charts, way up in here. And probably with today, if the markets did fall on Tuesday, this one may have fallen with it and may offer you a higher yield, starting yield. PE is at a 15.58. Forward PE, right around there, 15.08. Price to sales, 4.3. Price to book, 2.3. Moving slightly here. When charted, it does show the current stock price has a price under the yield. So again, their yield's way up here off the charts, which may indicate it could be undervalued at this time. The stock is trading above the industry average of 15.4 for those financials and below the S&P 500 at 22.78. Its price to book is at a 2.31, which is below where asset-based companies would be considered a deal. Price to sales, 4.33, which is above 3.0, where sales and service-based companies would be considered a deal. Here, their current dividend yield sits around 2.22 to 2.3. They pay out $2.20 per share each year. Okay, I was going to say that seems pretty high, but yeah, their stock is a little bit higher priced. Their payout ratio is at a solid 32.9%. They've grown their dividend for the past 6 years since 2012. They did freeze their dividend in 2008. They just froze it. They locked it out, but they've had a higher growth rate, dividend increase over the last 10 years than the previous stock here at a 9.64%. So that is NTRS. That is our fifth and final stock. So if you guys did like this article, remember to hit the thumbs up button below. Leave me a comment if there's any of these stocks here that you have within your own portfolio. Let me know in the comment section below. Are you thinking about possibly adding or looking into any of these? Let me know in the comment section. And if you are brand new to the channel, hit that subscribe button below. Now, quick disclaimer, I am not a financial advisor, tax professional, CPA of any sorts. The information provided is my opinion for entertainment and fun. This is just me as a financial investor myself, trying to help others make their money work for them, looking for some deals and all of that fun information. So my number one pick, looking at all these stocks, while I do like ADP, I don't like their current price. I don't like their current valuation. They seem like they've shot up as of 2017. They seem a little bit overpriced. I would like to see them come back down. Maybe they would have to fall by a nice chunk to make it worth it. While their dividend is above their price, I do believe there's more downside potential than upside potential, especially as we're going into a sort of rocky market and volatile market. I look at TRO here, the T-Row price, and the financials here, and they actually look a little bit solid. You're not buying them at the, you're buying them near almost the bottoming out point right now. They have good, solid financials. As far as their ratios go, they're slightly over. As far as, price to sales, 4.6, price to book, 3.7, but their PE ratios here look pretty solid. I would have to look a little bit further back, take a look at their balance sheet, take a look at their, go over their quarterly reports, yearly reports, but I believe, kind of looking at what information is provided, I think T-Row offers one of the best current pricings and, as far as DGI goes, 31 years of dividend growth and growing their dividend on average over the past 10 years at a 19.1%. Now, that's not sustainable. They're not going to be growing this for the longest time, but they have a lot of free cash flow they can kind of pump out there right now. And you can see here that they bumped it from, 55 cents to now 70 cents right there. So that's a huge increase. Not just because financials got unlocked recently. You saw JP Morgan, Goldman Sachs, Citigroup, they all bumped up their dividends very nicely by like 50%. That is because, they deregulated a lot of how much assets they would have to have on hand. So really interesting company, and that it's paid out even during recession. So that would be my number one pick. Number two, while it is overpriced right now, I believe ADP would probably come in at number two. And then we'd probably look at these last one here. My third pick here would probably be NTRS to take a look at. But those are my 5 stocks. Let me know, are you investing in anything this week, next week? Are you looking for any deals right now? I know the market just recently fell. The stock market's currently closed as you're watching this video, if you're watching this on Wednesday as this video is released. So let me know in the comment section below, what are you buying? I'm always interested in hearing all your thoughts. So that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.